rich friends? It's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many of you guys as possible become independent and profitable traders. So if that's something that you've been looking to do, you are in the right place at the right time. So welcome back to my channel. If you are new here, I do want to let you guys know that I have over 300 free Forex education videos that'll help you with things like understanding market structure, understanding entry points, candlesticks, and indicators, and all of the fundamental elements that you need in order to actually build your confidence as a trader on the charts. I do have a lot of different content, so explore. And if you have any types of videos that you would like to see, you can let me know down below in the comment box. If you want to connect with me outside of YouTube, you can follow me on Threads or join my personal mentorship program. I do live sessions every week, and I also post trade ideas for the students that I'm currently mentoring. Now, I will be closing my mentorship at the end of December 2024, and I'm only going to be locking in with a maximum of 35 people. So if you are interested in becoming a student, go ahead and register down below. Now, in today's quick video, we're going to be talking about how to day trade gold. Now, if you've been following me for some time, you know that I have been focusing on trading currency pairs, and I recently started to add gold to the rotation. Now, usually I'm scalping gold, and I do have a how to scalp gold video, which you'll find on one of my short, quick videos playlists. But I'm going to be telling you guys how to maximize your profits. If you want to have a little bit of patience and you want to wait a little bit longer for those trades to play out. Now, something you need to understand about a lot of these financial markets is that they are fractal markets. This means that you'll be able to find similar ups and downs on almost any time frame. So today we're going to be looking at gold on the daily time frame. And you can just get to this by going to Tradingview or whatever platform that you trade on and making sure that you select D. So this is pretty simple. In order to execute trading goal or anything on a daily time frame, all you need is to be able to identify your areas of support and resistance and where you're going to take profit and set your stop loss. And everything else is just a matter of patience. So I'm going to go ahead and put this chart in replay mode. And what you also need to understand is that you can do this on any time frame. But if you want to maximize your profit, you can also trade gold on the daily versus scalping. So when you're trading, the market can be going up, which you'll notice by a series of blue candles and higher highs being created, or the market can be going down, which you'll notice by a series of red candles or lower highs being created. Now, if we look at this gold chart on the daily, we can see that the market is falling down. We hit a swing high here, meaning this is the highest place that we can see on our chart. And then although the market did have a little push up here and buy, it didn't get as high as the previous high. And this created a new area of resistance or places to potentially look for sales. Now, when you are looking at the market, anytime you see that it's consistently revisiting an area and you start to see wicks at the top, it lets you know that the market wants to drop. If you see that the market is starting to consolidate at the bottom and you're seeing wicks at the bottom, this is usually a sign that the market wants to go up. So not only do we have these lower highs being created, we want to mark these up with some free tools that we can find directly on TradingView. So on my left panel, I'm going to come over here and I'm going to either get a horizontal line or a horizontal ray. And I'm going to hook this to the previous high. Now I'm going to take another horizontal ray and I'm going to hook this to the previous low. Now this strategy is just a matter of patience. If the next candle closes above our previous high, we're going to enter for a buy and set our take profit here. If the next candle closes below the previous low, we're going to enter for a sell and we're going to set our take profit here. And the reason why we're doing this is because once the market decides that it wants to go higher, it's going to open higher and it's going to close higher. If it wants to go lower, it's going to open lower and it's going to close lower. Let's add our horizontal lines at the high for our potential buy TP. And let's also add our horizontal line at the bottom for our potential sell TP. So the next candle closes below the previous day. So what do we want to do? We want to enter for a sell and we want to set our take profit at the first line. But you can set as many TPs as you want with this strategy because if the market is going to continue to fall, it's going to target these previous lows. So let's just add a few more potential TPs and hit play and see what happens. All right, so our first TP was hit, our second TP was hit, our third TP was hit, and we can see that the market is just revisiting previous zones, right? The levels were respected, but over a couple of days, you would have been able to secure. Let's see how many pips if we enter here, right? If you would have just stayed in this trade for a week based on that entry, that would have been about 11,658 pips. And all you had to do was wait to see if the market closed below the previous day and then target previous lows. Now, if you want additional confirmation, you can use the stochastic. So I'm just going to back it up. And we're also going to apply our stochastic as well. So if we were waiting to see if the market was going to close below the previous high or the previous low, we also want to look at what our stochastic is doing. Our stochastic is facing down. Now, if we look in the past, we can see that when the stochastic is facing down, when the orange line is above the blue line, and when one or both of these lines have crossed above the top line, the middle line, or the bottom line, the market is going down. Versus when you have the stochastic facing up, right? You have the blue line above the orange line, and it's crossed above the bottom, middle, or top line, the market will be going up. So once we get the break of structure, let's go to the next candle. We also have our sell signs on the stochastic as well, right? And we can go to the next candle and we can see we're still getting those sell confirmations on the stochastic. So we could have rolled this trade all the way down, stayed in for the week, and this would have been an awesome swing trade for gold. Now, I do encourage you guys to go back and look at this for a buy example as well. It's all a matter of patience, being able to identify those highs and lows, and knowing where to get in and where to get out of the market. Now, if you're in for a sell, you're going to want to set your stop loss above a previous high. And if you're in for a buy, you're going to want to set your stop loss below a previous low. Now, if this video was pretty easy to understand and you learned something, go ahead and drop a 7 in the chat down below. I would like to know if you guys have any questions, comments, or suggestions on what types of videos you'd like to see going forward. But that's really all I have for you guys today. Don't forget to subscribe and register for personal mentorship if you like. But until next time, rich friends.